Welcome to another episode of China Update, where I provide you guys with the most up-to-date political, economic and geostrategic analysis on the world's number 2 economy. My name is Tony. Let's jump in. Okay, happy Monday everybody. Let's start with the economy and the housing sector. We learned over the weekend with a statement to the Shanghai Stock Exchange that China Construction Bank Corp, one of China's 4 big state-owned lenders, will set up a 30 billion RMB, $4.2 billion US dollar, fund to buy properties from developers as part of Beijing's larger bailout package to get homes finished and prevent further contagion from the mortgage boycott movement from spreading across the financial system. Though the objectives of this particular fund are a little bit different. According to the statement, the fund, which lasts for 10 years, will invest in existing assets of real estate companies and renovate the properties into rental housing. The bank expressed that the fund will, quote, help explore the new growth model of the real estate market and facilitate the stable and healthy development of the property sector. End quote. Of course, we know that the financial health of developers and the property sector generally remain in dire straits. 12 months on now from the initial blow-up of Evergrande. According to numbers from consultancy China Real Estate Information Corp, last month, sales of new properties by China's 100 biggest developers totaled just $75 billion US dollars, a 32.9% decline year on year. Total sales value for the first 8 months of this year is down a devastating 47.4% versus the same period in 2021. As we know, Chinese policymakers have turned to debt-fueled infrastructure spending to fill the gap as best they can. Today, China's government-compiled so-called excavator index showed accelerated pace of construction activity across the country, a sign that, quote, the country has doubled down on infrastructure investment to spur economic growth, end quote, according to state media. This suggests that we should expect a large surge in construction in the next few months. Whether the construction results in long-term productivity gains is another question. Next up, over the weekend, local authorities announced that the Macau Special Administrative Region, China's Las Vegas, will be permitted to welcome back tour groups from the mainland of China as soon as November. We remember that the gambling hub and former Portuguese colony has seen its economy smashed these last few years during the pandemic as tourism and gambling demand, also a critical source of local government revenue, collapsed. Tour groups will be a much-needed shot in the arm for the territory. The local government aims to double the number of daily visitors to 40,000. The first groups to visit Macau will be from Shanghai and 4 Chinese provinces, including Guangdong in the south. The market was very happy with the news too. Shares in Macau's bruised and battered casino operators soared up to 13% during trading today, Monday. The announcement came earlier than expected and is a positive sign that perhaps in November, after the upcoming 20th Party Congress, China may finally see more loosening of its tight borders and zero-COVID policy. We remember that the day before this announcement, China's other special administrative region, Hong Kong, also announced the end to its mandatory hotel quarantine, also in an attempt to reverse damage done to the economy from the strict COVID-related restrictions. And finally, for the economy, today, Monday, the People's Bank of China announced that it will bring back a risk reserve requirement of 20% on banks' foreign exchange forward sales to clients, a tool to make it more expensive to bet against the Chinese currency, the Yuan, via onshore derivatives. The latest attempt by the central bank to slow the pace of Yuan depreciation against the US dollar. The central bank had lifted the risk reserves for foreign exchange forward trading from 0 to 20% in 2015, lowered it 2 years later, and raised it again in 2018. The reserve ratio has been 0 since 2020. Bloomberg's Hong Kong team writes that the People's Bank of China had sought to support the currency via its daily fixing, which limits the yuan's move by 2% on either side, at stronger than expected levels since August, pointing out that today, Monday, the daily reference rate for the yuan was set at a level weaker than 7 per dollar for the first time in 2 years. Hey guys, if you are enjoying today's episode of China Update, don't forget to hit the like button. And as always, anyone who wants to go the extra mile and help me keep China Update sustainable, Patreon and Buy Me a Coffee links are in the description below. Thank you so much everybody for the ongoing support. Okay, next up, Taiwan has long been a geopolitical flashpoint in East Asia, with the cross-strait situation a sensitive policy challenge within the region and in Washington-Beijing relations. But this year, the fault lines have been especially restless, with the island increasingly looking like a geopolitical football in games of great power competition. Let's look at the most recent Taiwan developments from the last few days. On the sidelines of the United Nations General Assembly over the weekend, according to Ministry of Foreign Affairs statements, Chinese Foreign Minister Wang Yi met with U.S. Secretary of State Antony Blinken and, quote, urged the U.S. to clearly state its opposition to all separatist activities supporting Taiwan independence, end quote, adding, quote, it is urgent for the two sides to establish a right way to get along with each other with a responsible attitude towards the world, history, and their people, so as to promote the stabilization of bilateral relations. End quote. Wang added that US-China relations are at a grave point due to the Taiwan question. A few days before this, on Thursday of last week, Wang Yi, speaking at an event hosted by the Asia Society in New York, expressed that Taiwan represented, quote, the biggest risk to China-US relations, end quote. The U.S. Department of State, through a spokesperson, confirmed the meeting, telling press that Blinken expressed to his Chinese counterpart that the U.S. has maintained its long-standing one-China policy, which is, quote, a commitment to maintaining peace and stability across the Taiwan Strait, end quote. Blinken also warned Wang against China providing further support to Russia in its war with Ukraine. Also last week, while speaking to the United Nations, US President Joe Biden expressed that the US remains committed to the One China policy and opposes, quote, unilateral changes to the status quo by either side, end quote. Meanwhile, also over the weekend, Taiwan was raised to by Russian Foreign Minister Sergei Lavrov during his speech at the United Nations General Assembly, as an isolated Moscow strikes out against the West and signals rhetorical support for a friendly Beijing. Lavrov accused the US of trying to, quote, subjugate and divide Asia, end quote, through its Indo-Pacific strategy generally and Taiwan policy specifically, and exclaimed that the US and other Western allies were playing with fire. Okay, that is today's episode of China Update. Thank you so much everybody for watching. Hope you have a wonderful Monday. I'll see you tomorrow.